On Monday, we learned that Ross Gerber sold some Tesla stock. And in this podcast, Ross Gerber explained exactly why he did it.
Tesla went down to 100 and I had 7,100 shares and I bought more shares and I got up to about 8,000 shares as it moved back to 200.
If we do the math here, 8,000 shares at $200 per share, that stock was worth that much. That was about 1.6 million, but that is only for his ETF, I think. If we look at all of Gerber Kawasaki, it owns 440,000 Tesla shares. And when Tesla was at $200 per share, that would be almost $90 million.
It was a good trade. It moved to 200, 210. My price target for right now is about 200, 50 times $4 in earnings. You know, this is not complex math. So if Tesla's trading substantially above 200, you know, that's nice. So maybe I want to like get my position back down because I was at 10% now, back down to 8.5.
Personally, in my own stock portfolio, I only own Tesla stock. And I know some people don't like then others trade Tesla stock and when we make money or lose money. I don't mind. If Ross does a good trade and he makes money, great for him. It's just not something I do. I just don't like how the odds are stacked against me if I actively trade. Although in this case, Ross is just managing his fund and his position based to allocation, so I don't really see a problem here.
People in my firm too were like, "Oh, Ross, you sold some." I go, "We managed to allocation." So in my firm and for my clients and for the ETF, every position we own is to an allocation. So for me, Tesla right now is 8.5. That hasn't changed. It got to 10%, so I pulled some back. My opinion of Tesla has not changed. If you come to me as a brand new client, I will buy you Tesla in an 8.5% position if you're in all equities. Okay, that if you're not 80, you know,
Right.
If I was 80, I would probably not own only Tesla stock in my stock portfolio. But here's why I do not own other stocks and especially funds. If I wanted to own something else, I would buy S&P 500. But here's why I would not buy Ross's fund as an example. It is down 33% from the inception date, which is July 2nd, 2021. And just to be clear, this is nothing personal against Ross or anything like that. I think there are some instances where it maybe makes sense to buy an ETF. I'm just talking about why I would not buy one. If it's right for you, you do what you have to do. I'm just showing you why I would not do this. And then we compare Tesla stock exactly from the same date, July 2nd, until today, and it is down 19.58%. If you only owned Tesla stock during the same period, Tesla stock went down less than Ross's fund. It is certainly a lot more volatile, but the end result so far has been a lot better. If I actually wanted to diversify, this is what I would do. I would buy S&P 500 from the exact same date, July 2nd, 2021. It is down 8.28%, not 33%. To be fair to Ross, his fund is still relatively new, specifically this ETF is. So we just don't have enough data, but still, I would rather own S&P 500 instead of almost any ETF, basically.
So Tesla is the number one position in your ETF, correct?
correct.
Okay. So if you believe right now it's worth about 200, what I'm trying to get at is why would that be your number one position if you believe literally over the next 6, 12, 24 months, there's very little upside to it?
No, that's not
what I'm trying to get. Why would you not bring it down and maybe elevate something else if you don't, your conviction isn't there in short term or even in the medium term?
Most stocks are trading for what they're worth. Like I don't think the market is so vastly mispriced with so many securities. So I think most days, most stocks are trading for what they're worth.
I personally believe that Tesla stock is still way underpriced, but sometimes you have absolutely absurd and extreme anomalies like what we had back in December, when even mainstream Wall Street firms like Morgan Stanley were saying that Tesla stock is trading well below its actual valuation. I mean, when Tesla stock got down all the way here, and then Tesla's forward PE was under 30, it was mind-bogglingly ridiculous. And just to be clear, I'm not always that bullish. Back in August 15th, I made this video and said, most likely, actually, it will drop further, talking about Tesla stock. I did not trade Tesla stock though, but looking back, maybe I should? I don't think so. That's just not what I do. I personally just dollar cost average. Right now, Tesla's forward price to earnings ratio is at about 50 and trailing price to earnings ratio is 53. While I think it is still very cheap, Wall Street now does not really think that way anymore. Not to a point how it did about 2 months ago.
You know, like I don't think the market's that inefficient. I think we have a rising interest rate environment with a Fed that won't stop raising rates, and that compresses PEs. And so stocks like Tesla are more vulnerable to the Fed per se than stocks like Steel Dynamics, which have like a 10 PE, you know, but fundamentally, like, I don't know if I agree with earnings estimates at $4. So Gary does this. I don't do this. Okay. I don't sit around counting cars and like trying to figure out exactly what earnings are going to be and then be wrong every quarter. Okay. I look at what the other 26 guys do, and I know they're all going to be wrong. And I just don't know how much they're going to be wrong by.
Even Troy misses, although he doesn't miss that much. Especially with his production estimates, he is always within 2% roughly. And with his delivery estimates, he misses by no more than 5.6%. I think, though, Troy right now is sort of adjusting to the different dynamics that Tesla is operating under. Earlier, he always would say Tesla would deliver this many and then Tesla would actually deliver more. But now, the last 2 quarters, Troy overestimated Tesla a little bit. So I think if you look at Troy's numbers for the next quarter, I think you sort of have to keep that in mind, and whatever he gives, maybe assume just a little bit less, probably just based on his last 2 guesses.
Right now, I don't think anybody knows what numbers are going to be for Q1.
In terms of deliveries, it is probably going to be a record quarter, but the real question is, what are the margins going to look like? And that we just really don't know for sure.
Do you think they will expand in China?
I think that would be the smartest thing. So, like, China is a really good place to manufacture lots of things, and they're really good at making stuff. And we've had a lot of success in Shanghai, but the politics are real bad right now. Like with Xi, you know, like it's really just Xi, I think. But like, so it's a big risk for Tesla to build a lot more in Shanghai, because if things go south, like that would be devastating to Tesla, you know?
I do agree that expanding further in China does make a lot of sense, because China has by far the world's biggest auto market, and it will probably grow more. But when I look at the risks that Tesla is facing, the one that I worry the most about is, what if something happens to Giga Shanghai? Short term, I think that would be absolutely devastating. Tesla stock would drop a lot, and it would actually lose some value, because now you lose a lot of production and you lose a big market that you had access to previously. However, there would be a silver lining in that I believe the competition is going to come from China and not from Germany or South Korea or from Japan. So if Tesla somehow is kicked out of China, then I believe these competitors could not access other important markets in the world. Matthew shared one new thing from his interview with Tom Zhu, or his conversation with Tom Zhu, and that is one big reason why Tesla really likes to build cars in Giga Shanghai is because Shanghai has this absolutely massive, enormous port. So you can get the cars out of there very easily and then ship them wherever you have to in the world. So if geopolitics, if that was not an issue, then China, I think, would be the number one choice for Tesla to expand further.
I appreciate everybody involved with it, and I hope everybody understands that my goal is to see success for Tesla, 100%. And I'm an investor in, and I'm not changing that. And if I make little shifts in my allocation, this is not something to be overanalyzed. I will tell you if I've decided that Tesla is not some great investment anymore. Trust me, I will tell you. But I look at a lot of stocks, okay? A lot of companies. And I think this is a wonderful opportunity for investors. It just is. Is it safe and unvolatile? No. But it's a wonderful, wonderful opportunity, and one that I think after this last week, I'm as confident as ever in.
These were very nice words, and I really appreciate that. Now that Ross is no longer running for the board, I like that Ross is a bull and he goes on TV and defends Tesla and spreads a message about Tesla. I like that. I can't help but like that. I like most bulls, most Tesla stock bulls. I often have different opinions and I disagree with some of them, and Ross certainly shocks me and stuns me. Seems like once every week, but I welcome that he is a Tesla stock bull. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.